without further ado, let me jump straight into the presentation. So it's another market landscape in Q2. So I think Q2 has been a very interesting quarter, right? So if you look at Q2, like the market cap in Q2 increased 45%. I think Q2 was, I would say, a recovery quarter after what happened in March, where we had Black Thursday, where price went down by more than half in just a 24 hours period. I think one thing that is quite noticeable to us is that typically when market cap goes up, trading volume goes up as well. But Q2 has been quite different from all the other quarters in the sense that trading volume has declined quite significantly in Q2. I think everyone got wrecked pretty badly during Black Thursday in March, and a lot of people, we saw trading volume decrease, not just for spot, but also for derivatives. And a lot of people have basically moving into DeFi. And I think that's something that's very interesting, and it's pretty much a defining factor in Q3, as we have already seen. I think if you look at the top 5 cryptocurrencies, on average, it went up by 22% across the top 5. But if you look closely into the breakdown, it's basically just Bitcoin, Ethereum doing well. Bitcoin recovered and gained 42%, but Ethereum had a stellar quarter. It went up close to 70%. XRP, BCH, and BSV pretty much stayed around the same, with about 1% gain for XRP and BCH and negative 4% loss for Bitcoin SV. I think if you look at Bitcoin specifically, comparing the first half of the year from January to July, we started the year somewhere around 7,000 or so, went up to a peak of around $10,300, and then Black Thursday on 12 and 13 March, where it went down 35%, and it bottomed at 5,000 USD. So anyone who bought things around this time did spectacularly well, and then it's now recovered close to around 9,300 today or so. Tried touching $10,000, but I couldn't touch the $10,000 mark. One thing to note was that the recovery was very swift, much faster than traditional market. This was, of course, triggered by the S&P sell-off as well, and it took only 48 days for Bitcoin to recover from the Black Thursday loss. So yeah, if you look at it, Bitcoin closed Q2 up 78% from the trough of 17 March. Yeah, and one thing to note is the average trading volume in Q2 were 20% lower than what it was in Q1. So that was some of the things that we saw. Price crashed in Q1, recovered in Q2. Trading volume was down significantly compared to Q1. I think the key defining factor that also helped in the rise of Bitcoin's price was also because of the halving. So Bitcoin halving happened on the 11th of May 2020. This is the third time Bitcoin halving happened. So it started from 50 Bitcoin to 25, 25 to 12.5, and this time around, every block that is mined, 6.25 Bitcoin will only be rewarded to the miners. What we did was we kind of took the halving day and kind of looked into the price changes 50 days before the halving and 50 days after the halving. I think it's something quite interesting to see is that in the third halving, in 50 days before halving, Bitcoin price increased by 50%, and 50 days after halving, Bitcoin price increased by 5%. So narrative that says that whenever halving happens, is sort of a bullish indicator for Bitcoin and the price goes up. So that is quite true for 2020's case, but I think a lot of people suffered pretty badly during March sell-off, and this increase was kind of like a consolation price if anyone didn't exit their position before that. If you look at 2016, right, like 50 days before halving, Bitcoin price only increased by 11%. So it was 50% versus 11%. And after the halving, Bitcoin price sold off and decreased by 9%. So I think one thing that's interesting to note is that despite Bitcoin having a market cap 15 times larger in 2020 than what it was in 2016, Bitcoin showed a more bullish price movement during the third halving event. Let's look at the hash rate. So typically after the halving, hash rate will drop down because inefficient miners will exit the space because they can no longer mine profitably. And this is essentially what we saw, right? So after the third halving on the 11th of May, hash rate dropped 27%. Basically, everyone using older ASICs, typically the S9, N-miner S9, they're no longer profitable, and they had to stop operation, causing a huge drop in the hash rate. And of course, some to remain profitable, some old miners switch from mining Bitcoin to Bitcoin Cash on Bitcoin SV. This drop in hash rate can also be explained by miner activity in China, where a lot of people are moving their mining equipments to Sichuan province to take advantage of the rainy season, which is happening now, where they have a lot of excess hydroelectric power with lower electricity costs. I think one thing that's interesting to note as well was the drop in hash rate that happened during Black Thursday in March. This was a huge drop as well, and basically forced some of the unprofitable miners to just shut off the machines earlier before the halving happened. Yeah, I mean, if you take a note here, Sichuan province in China accounts for about 54% of global mining share in December 2019. So whatever happens in Sichuan is a pretty big deal for the Bitcoin mining industry and controls a lot of the hash rate. I want you to know that is interesting as well is that during the halving event, like the average fees for Bitcoin went up very significantly. Before the halving, sometime from January to May, it was around 70 cents per transaction. 2 weeks before the halving, went up to $2.15. During the 2 weeks during the halving, it was $4.53 on average, with a peak of $6.63. And then it started going down, and now it normalizes around $1, but it's still higher than what it was before the halving event. So yeah, that's something that's interesting to take note of. Especially during the halving when this is due to the difficulty retargeting, right? The hash rate went down, but the difficulty still stays the same. So it takes a lot longer for a block to be mined and to be found. Therefore, the fees go up so that people to fill up the blocks. I think this is interesting, but I think Q3 will be very interesting because we'll be looking into Ethereum's gas fee, right? The gas fee, as you all know, I don't know if any of you are doing DeFi mining, but DeFi yield farming, but gas fees in Ethereum has been off the roof and it's basically crowded out any other Ethereum activity except for DeFi. But with that's for presentation next quarter, right? So if you look at crypto exchanges, the top 10 crypto exchanges have declined 7%. The trading volume have declined 7% quarter on quarter, and depicting similar downtrend for the top 30 total cryptocurrencies. So this is similar to what we saw in the early part of the report, where trading volume for coins went down. If you look at the top 10 exchange trading volume, so you can see that on average, it went down by 7%. However, two exchanges saw its trading volume increase in Q2, which was Kraken and Bitstamp. This is interesting. Bitstamp had the highest growth compared to Kraken, accounting for 90% of the gains. And I think interesting to note is that Binance trading volume, right? So Q2 is in yellow and Q1 is in this line. It went down by 10% in Q2. So everyone else had a decline. Poloniex had the largest decline of Bitfinex had the largest decline, 33% over here. However, if you look at decentralized exchanges, the story is completely different, right? So centralized exchanges, almost all the major exchanges went down. But if you look at DEXs, they all went up instead. So on average, it went up by 56% in Q2 compared to Q1. Uniswap V1 had a large increase of 152%. Uniswap V2 launched in May, 18th of May 2020, and the average trading volume was already $11 million, similar to Uniswap V1. But that being said, like even though the percentage increase is tremendous in terms of DEX, the base volume is just really low compared to what it is compared to centralized exchanges. So I think DEX will continue to see growth, but we need to see how fast before they start catching up. I think Q3 will be a very interesting quarter to watch out for, like DeFi and all these things are basically causing a lot of trading activity to happen on DEXs. We are seeing initial DEX offering happening now in Q3. So something where these tokens are only available on DEXs at the start, not available on some centralized exchanges. But some centralized exchanges try to take advantage of this. But yeah, that's something for us to take a look. One thing to take note, at CoinGecko, we look at the trust score, where we, instead of just looking at trading volume, because a lot of exchanges are faking their trading volume, we look at other factors. And one of the factors that we look at is web traffic. So web traffic on average went up, but are there more traders? Some of the research shows that maybe this is not really the case, because we saw that some of the the traffic sources, the referrals that we saw from SimilarWeb may appear inorganic, and they appear from the reference site, like crypto ad networks or faucet sites. So OKX in particular had the largest increase, over 239% in quarter-on-quarter web traffic estimates. And however, their top 5 referring sites, according to SimilarWeb, crypto ad network or faucet sites like @BTC and Cointiply. So we cross-check this against the trading volume, but we don't really see much increase in it accordingly. We're starting to see some of the exchanges buying web traffic as well. So I don't know how long we can use web traffic as an estimate for exchanges, but if this trend continues, it's not a good indicator for web traffic as an estimate of exchanges size, just like how trading volume has been manipulated badly. So let's look into derivatives at the moment. So we look at BitMEX and Binance Futures saw large declines in the trading volume dominance. So I think this is mainly because Huobi DM gained a big share in the space. Huobi DM launched Bitcoin perpetual swaps, and they now have 18% market share. This all came at the expense of BitMEX and Binance Futures. But if you look at the trading volume, as mentioned, it trended downwards and showed sign of shrinkage in Q2. And Huobi basically had an 18% dominance. If you look at the perpetual swap open interest, right, same thing again. BitMEX saw a huge decline on a market share basis for the top 8 derivative exchanges. Binance, however, managed to gain 2% in open interest. I think it's an interesting market to watch, this derivatives market. We start seeing players like Binance Futures starting to list a lot of tokens in their futures market, derivative market. Basically, if you compare against what BitMEX is offering, I think the other guys in the space are being more aggressive in growing their derivatives market. FTX, the open interest actually fell in Q2 by 2.3%. Again, mainly because of Huobi, but FTX was one of the biggest gainer in Q1 for derivatives, Bitcoin perpetual swaps. So let's look into DeFi right now, right? So this is like the hottest thing that's happening in crypto right now in Q3 and July. Like it's pretty much the thing that is revitalizing the market. So yeah, my guys put in defying the odds. DeFi definitely outperformed in Q2 2020. Yeah, there's a lot of puns in here. Guys definitely enjoy. So if you look at the Q-on-Q quarterly returns for tokens, right? For first half of the year, like if you look, these are the Link, Maker, 0x, Kyber Network, Crystal, Synthetics. They all showed significant gains in their first half performance. And you compare this against Bitcoin and Ether, it was not as great. And compare that against exchange token, it was not great as well. But Q2 was definitely the quarter that everyone gained a lot, and you can see that just the green lines, they're just significantly longer than any of the cryptocurrencies or exchange token. So yeah, Q1 was nothing much to shout about. Q2 is significantly a lot. I think Kyber Network had their DAO launch Catalyst. That's why there was a huge increase, 500% in first half of the year. I think one token that is not in this list, which we should include in the next quarter, is Aave Land token. That showed a significant price increase this year as well after the rebrand from ETH to Aave. Yeah, so in first half, DeFi token KNC, Kyber had the highest increase at 552%, followed by Link, Chainlink at 159%. As of today, like if we were to plot this up, like Chainlink has been on an absolute rocket ship and it's gone up significantly more. I think one of the questions that John asked earlier was why are DeFi tokens performing higher compared to ETH when ETH are staying stable? I don't really have an answer, but it's definitely because of DeFi, Compound, and all these governance tokens and things that is driving it. ETH, I think partly the reason is people are sort of anticipating ETH 2.0 to launch, but it's been taking some time before it's going up. So I think it's just a matter of time before ETH, maybe towards the end of the year when we have firmer confirmation that ETH 2.0 launch, then we might see ETH moving up the price movement chart. Yeah, so yeah, this is the chart. We didn't have comparison for Aave, but Aave is included in this chart. You see that Aave had a 712% increase returns in first half 2020. and Kyber followed next with 552%. Ren had 375%. Loopring did pretty well as well. Compound, everyone knows by now, had 175% gain. Absolutely great stuff. Chainlink and so on. Maker was the original DeFi token, the one that started it all, the grandfather of DeFi. Unfortunately, only had a return of 5% in first half of the year. I had a big crash during Black Thursday because there was issues and doubt about about whether the system will survive or not. So we don't know, but everyone else have taken a Maker's model and kind of did significantly more and more aggressive things with it. So yeah. So just how crazy did things get, right, in Q2? So if you look at DeFi powers, the total value locked in DeFi, basically the amount of assets locked in lending protocols, derivative protocols in DeFi, 3.67, basically the amount of TVL, amount of cryptocurrencies, Ether, USDC, DAI locked into DeFi in Q2. Number one, this is where Compound sits in terms of ranking for dollar value lock. $1.4 billion. That's the amount of money, amount of dollars that is added between 15 June to 15 July itself. And Compound is now the largest one. We used to look into Maker dominance, but now we look into Compound dominance at 28%. Things have gone absolutely crazy these days. We talk about 100% APR for Compound and all, previously on Curve especially, but now like people are doing even crazy stuff with YEarn. You're talking about 1000% APR as well. We start seeing a lot of DeFi governance token launching. So Q3 is very interesting. We have YFI, we have MTA, MStable token, and a bunch of other derivative tokens that are being planned to be launched. So high yields are fun, but I think it's useful to be mindful of the risk. Vitalik put out a tweet recently and said interest rates significantly higher than what you can get in traditional finance are inherently either temporary arbitrage opportunities or come with unstated risk attached. So as the saying goes, this thing is very risky, although DeFi offers significant, very high yield. There's a lot of risk involved. Chief among them is the smart contract risk, and it's something that you want to be careful upon. And if you can, buy some insurance on Nexus Mutual. Otherwise, don't put too much money that you're not willing to lose. And of course, there's all these other risks as well. So, okay, that's sort of my last slide. So I sort of have like 10 minutes or so that I can answer questions. So let me take a look at some of the questions that are in here. So yeah, I probably answered a few questions here. Let me see what was some of the questions that came by earlier just now. So yeah, Steve asked at the start, like, the rapid rise in DeFi market cap is most interesting. Will it continue past 2020? I'm pretty bullish on DeFi. I think 2020 is going to be like the year of DeFi, and I think what we are seeing right now is a trend where the market is preparing for a bull run in 2021. We are seeing early steps of the market being ready, and we start seeing maybe not an ICO as crazy as ICO days in 2017, 2018, but we definitely are seeing the ICO guys back in the form of initial DEX offering. I think if we saw 2019, it was 2019 last year, the centralized exchanges tried to revitalize the market through IEO. It did well for some time for a few IEOs like BitTorrent and Fetch through the Binance IO, but it was literally only Binance that did well. Like every other exchanges that tried to do an IO didn't really do well. But this time around, I think I'm inclined to say different, but I mean we all know that it's never different. I think the market is coming back, so it's something interesting to watch out for. Just be prepared. All right, good question. Let's see. What other questions? Have we started already? Yes, that was way earlier. Gas fees are insane right now. Yes, I agree. JPEX. I've been paying 100 Gwei for gas for a lot of my transactions on DeFi and I'm not so sure if you saw, like, we actually added the Ether gas price on CoinGecko's homepage. So if you go on to CoinGecko.com right now, you'll see that there is Bitcoin dominance, Ether dominance. At the top, we have total market cap, total volume, and then after that, we have Ether gas price. Let me see what's the price right now. And right now it's 75 Gwei for standard transactions. Let's see, what are the questions? Oh yeah, JPEGs, can't wait for August 4th for the test of ETH 2.0. Same here, I can't wait for ETH 2.0 to launch as well. Been waiting for it for too long. Is Syscoin same to Compound? What's the major difference? Nope, it's not the same. I don't really know Syscoin, but it's definitely not DeFi. Ah, cool. Okay. Let's see if there's any questions here. In about like 8 minutes or so, we'll transition over to DEMA and TM. After this, there'll be a continuation. There'll be a fireside chat on things. One of the questions in the Q&A section here is that what do I see being the biggest barrier of entry for non-crypto folks, and how is CoinGecko working to lower that barrier? In my opinion, the biggest barrier for entry is that crypto is just really, really complex. It's just really hard to get anybody in to crypto. Like, I mean, just trying to interact with any smart contract, you need to install MetaMask wallet, you need to load it out with ETH, and then you got to find a way to interact with all these different applications. It's not the easiest thing to do, and education is the key, I would say. Like, for example, in DeFi, like if someone new were to come into DeFi, that's just really complex. Like if I were to try to explain Compound to my father or my mother, like that's kind of an impossible thing to do. And education is the key. So I think that's one of the things that we are doing. We publish a book, How to DeFi. Let me just put it up here, the link. It's basically an introduction book to decentralized finance, and that's what we do to sort of help educate the market on things. Yep. Yeah, also because you guys are attending this meetup, so there's a $5 discount code, CoinGecko5, in case any of you want to buy the book and read about DeFi. I think someone was asking about STO, securities token offering. Everyone was talking after the ICO bubble burst in 2018. People are talking about STO being the thing that will revitalize the crypto market. No, I was pretty certain back in 2017 that time is not now. The STO market is not ready. Despite what everybody was saying, STO market, I was correct. The STO market did not take off. I think it will take off at some point, but we need regulators to give their okay before we can have a vibrant STO market running. So maybe just another maybe 5 more years or so, maybe realistically speaking, before we start seeing STO. One of the questions from Steve as well, do you see the current trend towards investment in DeFi tokens strengthening Ethereum's position as #1 smart contract platform? Yes, that is most definitely the case. I think if you look at the narrative in crypto space, about 1 year ago, like a lot of people were looking into Ethereum smart contract competitors. We have many other competitors coming into the market, saying that they can do higher throughput, lower fees, and so on. But we know by now that a lot of these things come with trade-offs, like all those delegated proof of stake tokens, platforms, smart contract platforms come at the cost of less decentralization. And they couldn't get, in short, they couldn't get any developer mindshare into the space, and therefore we couldn't get any interest on developers building onto other smart contract platforms. If you look at the developers, all the developers are interested in Ethereum, and they're all focused on building on Ethereum. And DeFi trend at this point in time is just solidifying what we are seeing, and will make Ethereum stronger. And of course, if everybody makes money, as what we are seeing now with DeFi, like a lot of people are making a lot of money from DeFi, that definitely helps attract more attention, and that gets more developers into the space. It sort of feed the virtuous cycle into the space. Hayashi asked a question: when CoinGecko IPO? I think if you're going for an IPO, we are way still some time away from that. So we're definitely growing. The team is growing. We are working really hard to improve CoinGecko, and we're always very open to feedback. And if you have any suggestions on how we can further improve CoinGecko, please feel free to email us at hello@coingecko.com, or just join our Telegram group or Discord and just share what you think we can do to improve. hopefully at some point, we will grow our revenues enough, large enough that we can go for an IPO. I hope so too. But let's see, right? It's a crypto market. There's many other exit opportunities we want to, or just carry on. Like for us, the important thing is about educating the crypto market. And as long as we are doing what we're doing good, yeah, that's the best way, I would say. Hey, Alex, CoinGecko is the best. Seriously, you guys have been killing it. Thank you very much for the support. Really appreciate it. I didn't realize I would talk pretty quickly and go through my presentation so fast, but I'm glad we could still do it. So yeah, ladies and gentlemen, I'll probably end the presentation right now.